Welcome everybody here at JFD Brokers to our next webinar with the topic human versus machine, who is the better trading? I think it's a quite interesting question, and we will bring some light on that question during that webinar, and additionally to the whole process of how to get algos running. Finally, yeah, today is the 6th of December 2017, 7 p.m. As usual, the only difference is we are one day earlier. Normally, the English one is on Thursday, but this week it's on Wednesday. Okay, my name, by the way, is Stefan Friedrichowski, and just that you know, you can directly call me Stefan if you want to get in touch with me via email. You see my email address here listed already on the first slide, s.friedrichowski@jfdbrokers.com. So if you have additional questions, any remarks, additional wishes, no problem, just get in touch with me. The other thing is that the slides, they are already ready for download. So via your GoToWebinar control panel, you can directly have access to those slides. There's a PDF document. So if you like, simply download that file as well. Good. Two remarks in front of my talk. One is, what I talk here today is exactly the same I have done on the world of trading. There it has been a seminar talk for interested traders. So maybe if somebody has been within that talk, it will be exactly the same one, only in English now. That's the main difference. And the other thing, I just want to mention it, it's more or less a review of what I have done over the last couple of years. Or if you see slides later, you will say, okay, that was already a topic 3 months ago, and this one 5 months ago. You're right. So it's a summary of a lot of talks during the last couple of months. But this one is more the general overview. But anyhow, if you like, just when you want to have some further details about specific strategies, I will mention here only briefly, then go to that website here. That's a JFD YouTube website, and that's exactly what you might press in Google to find that page here. And there you have all the older webinar recordings, and you will see strategies like price action strategy and so on and so forth, gap close, for example, and predictive power of indicators and so on. So you have access to all those previous webinars, of course, and then you will find more details. The other remark, as always, I have to show up that slide at least once during my talk. Our risk disclaimer, even if we don't talk in detail about specific trading strategies today, you always know whatever you do, whatever you trade it simply on your own. I think that's obvious and self-explaining. So I have to mention that before I really start with my talk. Okay. So what are the real main topics when we talk about human versus machine, who is a better trader? I want to start a little bit with a short comparison between human and machine, just from some principal guidelines. So it's really only a short table, but that we have a clear picture on what are the differences between human and machine. And then I will switch to something which may be funny for most of you if I say trading totally abstracted. That reflects a little bit of what is trading really. And you can simply write down one single line in order to describe trading and what it means if you trade. But you will see. But then I want to guide you a little bit more from what we need if we talk about professional algorithm trading, what are the inputs we need, what are the outputs, and so on. But that, for example, needs trading strategies, and I will briefly show you how I personally come from a trading idea to trading strategy, and finally to something which is really traded automatically. And of course, and that's one sentence I repeat that sentence in webinars, in seminars, and especially on such an event like World of Trading. There are hundreds of talks. Traders talk about trading, but one thing you should always keep in mind: if somebody is talking about trading, then he should be able to show his track record, his account. And that's all which finally counts. Just ask anybody who talks about trading, has brilliant ideas, show me your results. And that's all. And I really recommend to do that, because there are lots of people talking, but it's a good show. But what finally counts, is a track record. And of course, I will share those track records here with you. And finally, we go back to our opening question: who is a better trader? And let's start with that. Who is a better trader? Just give me some comments from your end. Just write down in the question area of the GoToWebinar control panel: who's a better trader, human or the machine? And just to have some view on who is listening here, and maybe you have some mind already right now. So I will have a look to that, and in a few minutes I will come with that result here as a quick questionnaire here. But let's see, what's your opinion? And finally, of course, I will share my opinion on my final slide with you as well. Okay. So if you talk about algorithmic trading, or in general about the algo world, I just want to share with you some highlights from the last two decades. And it's only really some remarks, a little bit related to trading, but not all. Just that we have a feeling of what is possible today with computer. So first point here, self-driving cars. They are really close to market introduction. And you may state, okay, maybe only in 1 year, maybe in 5 years. I don't know exactly. But in principle, it's already shown that cars are able to drive by their own, and that they can do that job quite well. And it's an amazing task. The overall complexity is huge. And to have the computers driving cars, I think that's remarkable. But even if we go back 20 years ago, there has been already the first chess computer called Deep Blue, which won against Garry Kasparov, who has been the world champion at that time, under real conditions. And finally, the computer won that game. It's amazing. It's 20 years ago. And maybe you know chess in more detail. It's not the easiest game. So it's remarkable what has been already possible 20 years ago. And just one number out of that Deep Blue computer. It's amazing that that computer was able to investigate 100 million let's call it settings. I'm not sure how you call it really in chess. And in order to give it a number, how good that specific situation is. And so it was 100 million per second, an amazing number. And this year, there was a breakthrough as well. That was another game, even more complex in terms of situations and the overall impact. That is the game called Go. It looks even easier than chess, but it's not easier. And this year, yeah, the world champion Key G, or however you pronounce that name, yeah, loses against the computer program AlphaGo from Google. And what's even more amazing, that the further development of that algo called AlphaGo Zero was able to be even better. And the input for that computer has been just the rules of the game and nothing else. So the training of that algorithm was simply done by the algorithm itself. So simply by playing against itself, that program was able to become the best player. And the input has just been the rules. Think about trading. The rules of trading are really easy. But now think about those kind of computers. What might happen if they start trading? And finally, just as an example from our daily life, you all know that if you visit Facebook, Google, or Amazon, something like that, you get so-called product placements, and honestly, they fit the interest of the user quite well. At least what I get here, if I go to those websites, it's not that bad. And what's behind? Simply learning algorithms, and finally that is called deep learning. It's getting out of the data of really huge and big data rules, and yeah, you show up with what you are doing in the internet, and they know what they should place as advertisement in front of you. It's amazing that you can get those rules, and finally, all is about what's called deep learning. Okay, so in between, I see the results of you saying who's a better trader, human or machine. And honestly, it's a 50-50. So half of you is about for the human, and the other half is for the machine. Let's see. Good. But now let's turn the questions the other way around. Who is a better trader? Are there any reasons why machines should be worse? Let's ask this way. Because they can learn so many things, as presented in my last slide. They can drive cars. And indeed, it's not straightforward to say why machines should be the worst trader. Let's start with the advantages of the machine. Of course, speed, no question. Computer can run extremely fast, can do jobs in milliseconds, what would take humans even hours. So speed is a big advantage. Precision, of course. It's calculating always right, at least as long as the code is not buggy. And finally, of course, the machine is absolutely emotionless. So there are no emotions. It's doing its job. And yeah, if the computer is trading, the computer would not even finally care about losses. Of course, those losses are your losses finally, but the computer is without any emotions. And of course, the computer is able to run 24/7. So anytime without any stop, only maybe if Microsoft is updating the operating system, and then you get a reboot. But anyhow, that is a different story. On the human side, we have two big advantages as well. And I will finally come to those two on my final slide again, because I think they are extremely mighty. One thing is that the human is able to have something what we call intuition. This is something you may say, okay, that's learning as well. You're right. It's something like an educated guess. If you come to a new situation, you might even think about trading. which has never been there before, then the human is able to come to a conclusion extremely fast. So that would be not that easy for the computer, because we can draw conclusions with less information and without big experience of the specific topic or the specific new situation. So that is one big advantage of the human. And the other one, I simply wrote down here creativity. What do I mean? I do not mean that humans are able to paint nice pictures like Mona Lisa or something like that. No, what I mean here is that we can come with totally new ideas. And that is a mighty tool as well. Even if you think about trading strategies, there might be really a fantastic new idea all of a sudden, and then we do it. Our disadvantages, of course, is psychologically. So we have emotions. We come under stress if we see losses, and even if we have several trades in a row being loser trades, that's a big disadvantage for us. And we do mistakes. I do mistakes, of course. I always remember a trade when I was about to open a trade 0.01 lot, and I opened this trade with one lot. And that account was definitely not really able to do it. But those mistakes might happen. And we are extremely slow. So if we see something new on the screen, in order to react, it takes us a really long time. On the computer side, honestly, the real disadvantages I don't see. But up to now, and that now may not be very long in the future, but there still is an input necessary, and that input comes from the human. It's the idea, it's a code, a lot of input things still coming from the human. Let's keep that table in mind, and in order to finally answer that question, who's the better trader? As I mentioned, what is trading in a nutshell? Now, just look to that equation. It's funny to write down trading in such an equation, but honestly, that's what trading is. We have something, in this case, it's our brain, and that brain comes to conclusions, makes decisions. And for a specific underlying, those conclusions are simply only three different states, like long, short, or flat. Flat even means do nothing. And even saying long may say, okay, I open a long position, and later I say short, then that would mean close my long position, and finally a second short comes, then I really short, something like that. And there are inputs for those kind of decisions. So it's just a function of the inputs which come to the decision long, short, flat. You may state, hey, and what about buy limit orders, buy stop orders, and something like that? If our time is here, let's say milliseconds or even microseconds, then what does it mean if you say buy stop at a certain level? It is only a conditional decision. You do it to right now, that condition, to say, okay, if the price is at the level of 1.835, then I open a long trade. It's nothing hidden in that equation here. It's simply that you say, if price hits a specific level, then you open your long trade. You can even wait until the situation really comes, and then we write down the equation once again and come to the same conclusion. So those things like limit orders or stop orders are within that equation as well. But what are the inputs? Of course, the inputs for that kind of decision, and even if you do discretionary trading and do your decisions out of the chart, you do exactly the same here. You look to the time and maybe to the time history, so to the price history of the specific underlying you might want to trade, and that is mentioned with X here. That's the price history, maybe 100 bars, maybe even 100,000 bars, whatever. And you may use in your charts indicators, and I call them here simply Y. And the reason is, and I put it in brackets, because indicators, they don't have any new information. Indicators are simply another equation out of the price history, and then you come to, for example, an EMA value, or let's go for an SMA value. Then it's just maybe SMA 20 means averaging of the last 20 candles. So indicators in general don't have any additional information which is already in the price history itself. It's only that we present that price history in a different way, like any indicator. But there are additional inputs in that equation. Maybe simply some news, and with news I mean every news. You may read newspapers, or you look to specific websites, or Reuters, or whatever input you get as news. They have an impact on your trading decision. You may use fundamental data as well, and with fundamental, I not even mean like if you describe a specific company and you look to the fundamental data of that company. No, it might even be a region or a political situation of a specific country, whatever. So those input you have in your mind as well. And of course, within that trading decision we have to do here, we look to trading costs and anything else. Finally, what we do else is, of course, we do money management for our trading activities, but that is in that equation as well. So a lot of input, and finally, it's only 3 different states, like long, short, flat. And now, what means trading? Make that decision in each millisecond, and that's all. And what we try to do is, of course, we try to generate profits. So that's the target of that equation, to gain profits finally. It's funny if you look for trading simply like such an equation. Of course, I don't have an equation like 3 times x plus 2 times y minus z, and then let's look whether we have long, short, or flat. But nevertheless, that's trading. And if you look trading from that perspective, of course, the computer has a big advantage over the human. But if we go further down the road, we want to have, something which really trades by its own in our personal account. And so what do we need if we want to come to that target? So what is really professional algo trading? And there are 3 steps involved. Of course, first, we need a good algorithm, a good trading strategy. We have to develop that kind of strategy. We have to optimize the strategy, look for the important key figures. We need specific inputs like indicators, whatever you have in mind. We need those, and we have to come to a real trading strategy, which has a fixed set of rules, so that every decision is clear, and that we can code something, or we can train the computer to do exactly what we have in mind with our kind of strategy. Next step now is the implementation of that strategy. And I personally go always away via expert advisors. Expert advisors are simply a little bit software, once again. That software runs on MT4 or MT5, my favorite trading platform. And So within my trading account, something, and that something is that piece of software, is now doing the implementation of my trading strategy. It looks to the prices, price changes, and is opening the trades, closing the trades, moving around, stop losses, take profits, whatever is needed. And so that expert advisor is really managing all the trades and is executing all the trades. Whether it's market orders or buy stop orders, whatever, that is a piece of software we need to implement our strategy. I personally recommend always not to run those expert advisors on your private computer at home. I prefer so-called VPS. That stands for a virtual private server. That is something that's more or less a computer you can rent in a computer farm, and then you have such a computer remote, and that computer is much more suitable for those activities like automatic trading than your private computer at home, simply because of two reasons. One is that at home you might lose your internet connection, or even um, the electricity goes down, whatever happens. And those computer farms, they are much more protected against those circumstances than you can do at home. The best is that you do that directly with your broker. Your broker, in this case JFD, or in my case, is offering such a service, and then you get access to computer farms which know what you are doing. So they know that on Tuesday, when Microsoft is doing maybe updates, that they will not run automatically and reboot the computer, and you have to restart your MT4. So they know what they are doing. So those are quite well. Finally, what you need if you go for algo trading, as for every trading, you need a good broker. And of course, my choice here is JFD. But that's something I go a little bit more in depth later. Not today. I think that will be a webinar in January. But anyhow, so those three steps we need: algorithms, expert advisors, and the final execution on a virtual private server. And then you have all the inputs for professional algo trading. Today, I will focus a little bit more on the development of the algorithms that you have to code. Expert advisors, of course, you know, and the last step is just something to be done. It's not that's not really a big deal. Okay, but how do we come to a trading strategy in order to go the complete road down? So my starting point is always what I call an observation in the chart, or simply some general thoughts about trading. So I look, of course, still I look personally to charts, and not only just coding algorithms, because my ideas, they stem from charts, of course, because I see something and I think, hey, that looks like a rule. Just a quick example. I see two green candles followed by one red, and then I think I know what happens next. That's not a real example. It's just to tell you how ideas are generated. It's really looking to charts. It's specific actions I see, and then it's the most important next step. We have an idea of what comes typically next after whatever indicator observation you have. Then we need a proof of our idea. And that can only be done statistically with historical prices. What we finally need is not an observation like, okay, 3 times it was positive, and scrolling a little bit in the chart, and maybe we see a fourth example, and then we say, okay, good, tomorrow I trade that idea. No, we need a proof that we have a real edge, that we have a real probability advantage. And that thing has to be proven maybe by Excel, maybe by other computer programs. I do both. First, proof of concept is in most cases just Excel, and then I switch to C programming simply because of speed, and I'll show you an example later. Only if we have such an edge, we can later start trading. And that sentence is true for any kind of trading strategy, even if you do discretionary trading. You should know that you have an advantage with exactly what you are doing. And only if you have a proof, then go that road. What we see there, we need trading rules, and they must be absolutely clear, 100% without any question mark. And minimum criteria are simply that we need an entry criteria for our open of a trade or pending order or whatever. So we need a clear entry out of those rules. We need a clear exit because every trade has to come to an end. We don't want to have trades running for years. So we need an exit. Of course, we need a methodology for calculating our position size because that's what we have to do. We need to know 0.02, 1 lot, 3 lots, whatever, and no trade without stop loss. And the last 2 points, they depend on each other because if we don't have a stop loss, we are not able to calculate our position size because we are not able to calculate our risk. So that's extremely important. And I know lots of people are still trading without stop losses, and I would never do it. Only if I have in mind that I can lose a lot of money. For example, if I buy 1 lot DAX, let's say today, DAX at about 13,000 points, of course, I don't need a stop loss if I'm willing finally to have a potential loss of 13,000 euros. In that case, I don't need a stop loss, of course, but I don't think that is what you have in mind if you want to trade the DAX. Do we need a stop? Do we need to take profit? Not really, because most strategies I develop, they have take profits, but sometimes not. As long as I have an exit criteria, I can even go for trades without take profit. If I know when that trade should come to an end, then it will be exit by another criteria. Just an example. Think about an EMA following strategy. We open a trade when first time the price crosses the EMA from below to above, and then we open our long trade for that underlying. And maybe our exit criteria is simply that we wait until once again we cross the EMA, and that might be our exit. So in this case, we don't need to take profit, but I would not open the trade without a stop loss, even if I have such an exit criteria. So that's something definitely we need when we talk about trading strategies. There's some basic rules how to come to those. A quick example here, just power candles. I think that was a webinar 3, 4, 5 months ago that we developed a complete strategy out of power candles. But what do I mean? Power candles are those huge candles within the chart, something like here, that green one. And the original question was, is there a typical price action after such a power candle? So is there something which repeats? Something maybe like indicated here by my red line. And indeed, what we found out was, hey, yeah, we can see something like that in the moment after such a power candle. So that was a brilliant base strategy to open trades after such power candles. And of course, we need that proof of concept that we have such a typical price action after the occurrence of such a power candle. But just one question you have to answer: when do you talk about power candle? So we need a minimum size, for example, of such a candle in order to say, okay, now we have it, and now we know what to do. So that's just one example of potential trading strategies. Just another example here, open range breakout strategies, like here in that chart. So breakout strategies typically one like you have two different points in time, in this case here midnight and 8 o'clock, and within that time frame or time period, then you look for the highest values, the maximum and the minimum, so that creates a range within that chart. And now you place two orders, one buy stop order at the upper end and the sell stop order at the lower end. And those orders typically are OCO. That means one cancels the other. If the one is triggered, then okay, we like here, then you delete, you cancel your buy stop order. And in my example, as always, if somebody is presenting a strategy, everything works 100%. Price goes down and hits my target here at the end of that arrow here. And yeah, that's a breakout strategy. But of course, once again, that kind of strategy has degrees of freedom. In this case, minimum 3 degrees of freedom. And when I talk about degrees of freedom, that sounds a little bit more mathematical, or but it's, think about parameters like EMA periods. 238 might be your EMA period. You are in favor. Anyhow, so here the parameters or the degrees of freedom are range start time, in that example, midnight, range end time, 8 o'clock. And finally, what we need is something like a take profit multiplier, or simply call it risk reward ratio. Within that list, you might miss, hey, where's the stop loss? Yeah, the stop loss is given by the range itself. So stop loss is always the opposite side. So the stop loss is given. When it comes to trading, we would calculate for example, for risk, for a fixed number of euros, would calculate the position size. And then in order to get our take profit value here, we multiply that distance, the height of our gray box, with some certain factor, that multiplier. In my case, that risk reward ratio was simply 1. But the question is, when we develop such a strategy, hey, what are the best times? Is it midnight to 8? Is it 1 o'clock to 3 o'clock, or whatever? And in order to answer that question, we have to ask first another question. And that is a question, I will come to that in a minute. But so I missed or I messed up the order of the slides anyhow. So if we want to do something like that, then, and in order to optimize the strategy, first we need is historical price data. And you see some different sources here I personally use. And those are Yahoo Finance for D1 data, Stock for D1, his data for smaller time frames, and Dukascopy again for smaller time frames. Those sources are all free, so you don't have to pay for the data. And that's what we need in order to investigate our specific strategy. Now the question is, hey, how to do it? How can we optimize our strategy? How can we find our parameters? Like range start time, range end time, or in the other example, like power candles, the minimum size of a candle, which we now name a power candle. You can do a lot of things already in Excel. And what you have to do then is you have to vary the different parameters and see and then have a look to the results. That's of course possible for D1 and maybe sometimes even down to H1, but it's getting more and more complicated because the amount of data. If you are at H1 or even smaller time frames, then you need something else. You cannot manage that any longer in Excel, at least not if you want to have a look to long price histories, like, for example, 10 years, or even if you go a few years, then you have simply too much data. And what I do then is I write my own C programs because they can do that kind of calculation extremely fast. And compared, for example, to Excel or even to backtesting in MT4, it's about 100,000 times faster. And I show you an example later. But still there's one question. What should I optimize? You may answer immediately, okay, highest profit, I want profits. Yeah, but is profit everything? There are other aspects, like, for example, drawdowns. And if you have visited a lot of webinars during the last couple of months, you know that slide. That is simply the question, what equity here, if you have the choice, which one is the best of those four? And maybe you tend to say directly, hey, it's the red one, generating the highest profits. No. For my favorite here is equity number 2, so the more brown one here, my cursor is now. And what is the criteria? The equity goes north, which is good. So it has a decent slope, good. But it has more or less no drawdown. So the movements to the south, like here in the red one, they are even much more pronounced and not pronounced in the brown one here. So it's a combination of slope, so getting profits. The slope of the equity has to do with how much euro do I earn per trade, per day, per whatever unit. But on the other hand, I want to have the smallest possible drawdowns. And it's both, it's a combination. And finally, I put something else into that equation because I personally like equities which are really straight. So the linearity of such an equity should be very good, or mathematically you can use what is called R square. That's a measure to get a number for that linearity, and the 1 is a perfect straight line, and the 0 would mean it's more simply noise. So, and now we know how to optimize a strategy. We need 3 key figures. We calculate the maximum drawdown. We calculate the equity of the slope of the equity, and that what's called R square, that's the linearity. And if you simply have the following 3 sentences in mind, like I want minimum drawdown, highest slope, and a linearity close to 1, you can directly come to the conclusions. I write down that equation. Maximum drawdown divided by slope divided by R square, and that number should be positive and the smallest what's possible. So if you minimize that number, but of course it must be a positive number, otherwise you have a losing strategy, then you are done. So that is my personal key figure in order to optimize any strategy, because that combines highest slope, generating profits, lowest maximum drawdown, and a good linearity. That's how I do it. And That key figure in Excel sheets, I call that key figure sometimes opti. And just to have an example here, you might remember that we have had a strategy in a mean reversion strategy. We have generated Excel sheets like this that we get an equity here, and all our trading rules are coded into that Excel sheet. And then we have the possibility to change parameters, like, for example, the EMA period. And of course, it changes here the equity. But you see, it's not that huge change if I come from one EMA value to another EMA value, which is good. And that is another topic on my previous slide, but I will come to that. So we are able to calculate equities, for example, here in Excel. And we have those key figures like my opti, and opti is exactly that equation I wrote down last. So we can do things in Excel, and we have to avoid over optimization. And there are three typical methods I use here, and one is called the so-called neighborhood analysis in the parameter space. Sounds really complicated, but it's quite easy. Think about you have a strategy running with an EMA, and you get super results with an EMA of 200. And now you change to 201, the EMA period from 200 to 201, and your equity goes down. What would you do? Would you trust that trading strategy? I personally would say no. And that is what I call neighborhood analysis. So we have a parameter, in my case now this EMA, and if we go to the right, if we go to the left, and my equity ruins, then I would say don't go for that. And that avoids over optimization. And another methodology, I will come to that in my next slide, that is a walk forward methodology. I will explain it in a second. And the third one is that you simply use a small variation noise of your price data. So if you add a little bit noise to to the real price data, and your equity directly goes down, so your slope may even become negative, then the alarm bells should ring, because that is a sign for over optimization. That walk forward methodology works like the following, and that is a good methodology in order to get experience with your trading strategy. So the chart here is nothing I want to trade, so I don't talk about resistance lines or triangles within the chart. It's not only illustrating what I'm doing here. We have here 10 years of price history. And finally, the strategy may run on H1 so that you would see any candle in detail here. But the point how to come to a trading strategy, or to optimize a trading strategy and know that you don't over optimize yourself, that is done with that illustration here. So think about, we have that green box that represents maybe 2 years in time frame, and within that time frame, within those 2 years, which are far in the past from today's perspective, you do that optimization, and you come to your parameters for your specific trading strategy, and those are good within the green box. And what you do now is you apply those parameters in the now coming future, and that is represented by the red box here. So that part of data has not been part of your optimization, and you apply your rules now in that red box. So you do trading in the future. And that now you can do iteratively here through the complete history of data you have. And finally, you come here to the end. And now we do exactly what we have done already 100 times within the complete historical data space. We do it now live tomorrow in our real account. But the good thing is we have done that kind of, let's call it, experiment already in the past. And if we know that we get good results there, It's no guarantee that we get good results in the future as well, but at least we know what we are doing, and that is good. So that is a so-called walk forward methodology, and that you have a short impression of when I talk about optimization of strategies and involving computers in calculating equities. Just a quick example that you can see a little bit of what's possible in terms of speed investigating trading strategies. So there will not happen much now on my screen, but only that you see a little bit what's possible with today's computer power. What we will do here, I will start a program, and that computer program will first read 10 years price history of 7 underlyings. So that means for each underlying, I get close to 100,000 candles price history. For 7 underlyings, everything with euro in this case. And then there's a trading strategy, and I calculate equities according to my trading rules. Equities for a given parameter set. And if I start now that piece of software here, first it's reading the data, reading, and now every line you see here, and I don't know whether you can see it directly, but I think you don't get it directly because it's extremely small, extremely fast. But I can tell you the number. For 10 years price history, 7 underlyings, I can calculate 120 equities per second. Every equity is a sequence of up to 100,000 trades. Everything is calculated with risk management and so on. So even on my personal computer, I can calculate 120 equities per second for 10 years price history on H1 price data. So you may get an impression of what's possible, and you may get an impression of what other even real big companies which have not only a single computer, they may have 1,000 computers doing that kind of task, what they are able to do. So the power, the speed is extremely fast. So it's 120 equities per second, 7 underlyings for 10 years price history. Why is it that fast? The reason is because I code everything in C, and that computer language C is simply extremely fast. And I can do methodologies like walk forward, adding noise, everything in order to come to trading strategies which are not over-optimized. And you see a lot of examples during the last webinars. Therefore, I refer to those recordings if you want to learn more about the methodologies, open range breakouts, price action, mean reversion, power candles, breakouts, whatever. So there have been a lot of examples. And that's exactly of how I do my development. That means I will want to show you first, once again, that slide here. Developing the algorithm, checking my trading idea, whether it is worth to optimize, then optimize my trading strategy, then with the help of Peter Milner in Austria, coding the expert advisor, which is then running on a VPS within MT4 in order to really trade my strategy in my account. And now we are at the topic account. Because I promised you should always ask people talking about trading, please show me your track record. And of course, I do it. Yeah. And I have here in the slides just a few examples, and the pictures here are 2 or 3 weeks old. As I mentioned, it was World of Trading, but I will switch now to what's really live. So I can go here for the real results. And I share those information honest. That means I show the bad one as well. And let's start here. So the first one, brilliant. There was at 8 months history now, developing brilliant, close to 20% plus, which is a really fair number, a good number within that time frame. But you see, on the other hand, a loser with maybe 8% right now, but that's trading. So it's one strategy, 1, 2. But let's go quickly through that. You see really what's possible with algo trading. And unfortunately, I cannot compare it to hundreds of maybe accounts who are trading discretionary to simply ask to answer the opening question, who's the better trader by statistics. I can only show my statistic, and that's what you see here. So we have different kind of strategies, strategies which are more or less at zero level, like 3 and 4. But here we have quite positive numbers, 5 and 6, really developing great. That 6, by the way, for example, is a gold breakout strategy. Strategies which have a good increase, then a flat situation, okay, but still fair positive, or just being on break-even level, like this one here, having a good sequence upwards, sequence downwards, but still okay, or other examples like you see here, and the last developing variance extremely positive, even those which have such a drawdown here at the very beginning of opening that kind of strategy. You see the straight recovery here within 2 months as expected for that strategy, behaving extremely well. So you see lots of additional good examples here, and finally one flat example here as well. So as always, drawdowns, they belong to the trading activities. We know that, and we know what we can expect from those kind of strategies. So it's all examples, all the 20 strategies, really different strategies. A few of them are similar to each other, but basic concept is always something different. And everything is running 100% automatically, running by an expert advisor, running on such a VPS. So that are my results here in accounts. And yeah, let's come back to our opening question. Who is a better trader? So my personal answer is simply machine. I only know numbers from what I read in the internet. There are rules like 90-90-90. That 90-90-90 stands for 90% of traders are losing 90% of their money within 90 days. That sentence is not from me. It's something out of the internet. Other get numbers like only 20% of traders gain profits. So that's only what I can compare to here. I have no statistics about real results. I see my results. I know what they are doing. And therefore, my answer is clearly the machine is a better trader. Is there any guarantee for future profits? Of course not. As in every case, when you talk about trading, there are no guarantees. So the good thing is, if you do things like walk forward methodology, we have self-adapting strategies. So they look to the history and adapt themselves. So they change parameters, which is good. So they are not static, they are dynamically. And still, if you go for that question, human versus machine, still we need the human to code whatever, the Excel sheet, the expert advisor, or the C program. So still the human, they give the input, and the computer is helping in the process of optimization and is doing the execution finally. But still, I want to repeat the sentence we have had more or less at the beginning, that we should not underestimate the creativity of humans. We may bring up new ideas, new thoughts, really creative one, which more or less create a new word. And that sentence is not really meaning that we get a second word, a second earth. No, it's we can develop things no one has thought about before. And that's a feature of a human which is absolutely fantastic, and therefore still the human will play yeah a big the humans will have a big impact on trading even for the next couple of decades. I got a question here. Is the webinar archived? Yes, of course. Uh, Tomorrow around 10 o'clock, for example, you will find the recordings of the webinar on the YouTube channel of JFD Brokers. So as I showed previously, so it's exactly here, that webpage, JFD Brokers. So you press Google JFD Brokers, then you come directly here to that web page, and you see, for example, the German one here, yesterday webinar, same topic, but in German, anyhow. So there you find the archive and the recordings of those webinars. I hope you enjoyed even a webinar like this one here. It's a more general overview of professional algo trading. And yeah, with my personal answer to the question, who's a better trader? That's for now. I hope you enjoyed. See you in 2 weeks. We have a next webinar. Then we come back to a new trading strategy. We will develop a new one within that webinar. And hopefully I'll see you in 2 weeks. Any questions? Just send me an email here to s.friedrichowski@jfdbrokers. And then you can get in touch with me personally. Just because I see there is one additional question. Do you sell signals? No, I don't sell signals, but at JFD, they work hard in order to come with some very cool solutions for you that you can follow those kind of strategies. But there's one way you can do it already today. If you Google for JFD Wealth, then you will be directed to a new webpage from JFD, which is a sub-department which is really called JFD Wealth. And there you find the first offer that is a trading basket strategy. So it's really that name, basket strategy. So you can open an account, and then that kind of strategy runs directly on your account. You find that directly looking for JFD Wealth, and then go for the basket strategy. Okay, that's for now. I hope you enjoy, and yeah, have a nice evening. Bye bye.